Hello traders, the title of the video is Elliott Wave Trader is answering a specific corrective wave question. Alright, so a trader, a TSTW trader, has sent me an email and he was asking me to clarify a scenario when a trend that violates the impulsive waves rule, right, will be followed by a corrective wave. All right. If I understand the question very well, is that the gentleman, all right, so a trend is starting, all right, and he starts counting the waves, all right. As he is counting the wave, he has noticed that there is an Elliott wave violation. Talking about, all right, either the third wave is the shortest wave, which it shouldn't be, or the fourth wave is overlapping the first wave. So there is a trend that is developing, and as the trend is progressing and we are counting the Elliott wave, we have noticed that there is an Elliott wave violation. All right. So the question is, after that failure of the trend, are we going to have another corrective wave? And this is a very important question that we're going to answer today. All right. So first thing first, we have 4 specific corrective waves. So we need to understand the corrective wave that we have. All right. We have the zigzag pattern. That's one example of Elliott wave corrective wave. We have the flat correction, another example of a corrective wave. We have the ABCDE, a triangle. The 4th example of corrective wave is what we call the combination. So a combination of a different type of corrective wave, either a flat and a zigzag, or a flat, a next wave, all right, and another a zigzag, all right, a combination of a triangle, a zigzag, or a flat correction. So those are the 4 types of specific corrective wave. All right, so when we are counting wave, if we think that there is a trend in place and we are counting wave, and we realize that there is an Elliott wave violation, the first thing that will come into our mind is that this is not, okay, an impulse wave. This is probably a corrective wave. Now we need to find out what type of corrective wave that we have. All right. So the answer to his question is that yes, if the trend has violated the Elliott wave principle, the following move will be a corrective wave. All right. So we need to answer the question carefully, because anytime we see that there is an Elliott wave violation, if the trend has violated the Elliott wave principle, it means that it is a corrective wave. Okay. Now the question that we must ask is that what is it correcting? All right. The next question that we can also ask, what kind of a corrective wave do we have? All right. So the trend has failed. Is it now a zigzag pattern? Is it now a flat correction? Is it a triangle? Is it a combination? Is it a next wave? So the X wave is also a corrective wave because it's a trend that has failed. So it does not qualify as an impulse wave. Therefore, it's a corrective wave. The S wave is a different type of corrective wave because, in fact, it's connecting 2 corrective waves. So, in fact, if a trend has violated the Elliott wave principle, all right, the first thing that we can think of is the X wave. But we shouldn't ignore other corrective waves such as the triangle, the flat correction, and the zigzag. So whenever we see a trend in first, so you count the first wave, all right, everything looks good. All right, now the second wave has cancelled the first wave. If the second wave has cancelled the first wave, it's a different scenario. If that is the violation, so suppose you are here, so a trend has begun, okay? You see first wave, good. Now the second wave has cancelled the first wave. It's a violation. So in this case, we will not expect another corrective wave. Do you understand? If the second wave has cancelled the first wave, we will not expect another corrective wave. What we will think of straight away is that we will start counting the wave. It does not mean that a corrective wave cannot be formed after the second wave has cancelled the first one, but anytime the second wave has cancelled the first one, we will restart counting the wave. So we will expect a new first wave. And after that, we will see whether the trend will continue or not. If the trend did not continue, well, it's another corrective wave. All right. So I have here on my chart, so probably the trader is thinking of the WXY corrective wave. When we usually see that scenario, so you see here we have a trending first, and then we have a correction. You see here, 1, 2, 3, another move up and down. This is a correction forming a W here. So now the price start going out here. We are looking at the Maxim integrated product. And now it's going up. What do we have here? It looks like a trend developing because we have a rising channel, yes or no? But that trend is not yet confirmed. It will be confirmed if the price breaks above the prior high and exceeded the 138.2% Fibonacci extension level of the prior trend. All right. But as the trend is developing and we start counting the wave, if we notice straight away, so now the trend is not even finished, now we notice that there is an Elliott wave violation. Probably we have noticed that now the third wave is the shortest motive wave. All right? The third wave is the shortest motive wave, is a violation of Elliott wave principle. Or the fourth Elliott wave is overlapping the first wave during that trend. It's an Elliott wave violation. Therefore, we will expect another corrective wave, because that trend that has failed is also a corrective wave. All right. So suppose you are here, so you see, count first wave, second wave, third wave. All right. Everything looks good so far. And here we have fourth wave coming to overlap the first wave. Now we see that there is an Elliott wave violation here. All right. So, but remember that if you are here, like you see an Elliott wave violation, so fourth wave coming here, the price can still go up one more time. All right. Before we may see a corrective wave. Am I answering the question correctly now? All right. So you are counting your wave. So that's one example of Elliott wave violation. First wave, second wave, third wave. Now we see the fourth wave overlapping the first wave. Now from here, don't expect straight away a corrective wave in this case. We may see another move up first before we will see a corrective wave. But any trend that has violated the Elliott wave principle is a corrective wave. That's it. It's not an impulsive wave. Therefore, it is a corrective wave. Now, the question we must ask, is it a triangle? Is it a flat correction? Is it a zigzag? Or is it a combination? Or is it a next wave? If we are sure, like this one here, we see now we call this one a W. Now we are expecting a next wave. Is it going to be X wave, or is it going to be a fully fledged trend? Will the trend be completed without any area wave violation? Will the trend go above the 138.2% Fibonacci extension level of the prior high here? All right, that's the only time that we'll call it a trend. But as soon as we see an area wave violation, we pay attention carefully. All right. So one example of area wave violation will be, for instance, so straight away we see the second wave cancel here. In this scenario, well, we will expect a new first wave, because if the first wave is cancelled, our expectation that the market will try to restart the trend. All right. That's the first scenario. So we'll expect a new move up like this. But that move up may not continue. We may see even a consolidation. The price may oscillate like this, ups and down. So, though we are area wave trader, be careful. There are another type of corrective wave that I don't want to talk about here, a correction that I don't want to talk about here. So you do not get confused. Remember that a consolidation is also a correction. So price may be going like this, oscillating ups and down. All right. It is not an ABCDE. It is not, all right, a flat correction. It is not a zigzag. It is not a combination. It is just a consolidation. But a normal consolidation is also a correction. Don't get confused, all right? So because when we are talking about area wave, we mention only 4 specific corrective waves: the zigzag, the flat, the triangle, and the combination. But a normal consolidation is also a correction. So you may see sometimes like this price goes up, all right? And then it starts consolidating, ups and down. So you're looking at it, you say, what kind of a corrective wave is this? There's none, but it is a correction, yes or no? It's not it is not A, B, C, D, E. It is not a zigzag. It is not a flat. It's not a combination, but it's just a normal consolidation. And then after the consolidation be prolonged, so you are looking for your normal corrective wave. They didn't appear here. And then the price, after the consolidation, now it starts going up big time, forming the third area wave. And after the third area wave, here we are again, especially another correction. But that correction is just another consolidation or a simple pullback like this, in one line, pullback like this. So when we are talking about a trend that has violated the area wave principle, we need to be careful. So if the first wave is up, second wave cancel it, that's an area wave violation. Okay, good. We'll expect a new first wave, but will that first area wave be followed by a normal second wave, a third wave, and a fifth wave to form a new trend? Or will the price just form, okay, a consolidation, which means the price can just go, after the second wave has canceled the first wave, we may just see it going horizontal, 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 horizontal. All right. All right. That's one scenario. Or the first area wave is in place. The second wave is being formed. Now, the third wave is also formed, but the fourth wave has overlapped the first wave. That's again an area wave violation. If that is the case, that the fourth wave has overlapped the first wave, which it shouldn't during a trending phase, you have to always understand that the market will expect it to go back up a bit. All right? Unless it's coming down completely down like this. All right? It can do that also. It can go 1 to 3 minimum price point free and then just crash it down like this. So the question is, all right, is it consolidating? So don't forget the consolidation. You need to remember that we may see a consolidation. So you'll be looking for Elliott wave, corrective wave. You may not see it. So the trend has failed. So like here, it's going up. You are counting your wave. You see that this is not an impulse wave. Now you're expecting another corrective wave, but it may not be a corrective wave. It will just pull back nicely, down here again, and then start consolidating or forming a double bottom chart pattern. All right, but the typical trend that has failed is the X wave. So we may see, for instance, a W like this, and a trend that has started may violate the Elliott wave principle or may not be a fully fledged trend, which means did not go above the 138.2% Fibonacci extension level of the prior trend. And then if the trend line, so use trend line. So if there is a trend and there is a violation of Elliott wave principle, draw the channel and just follow the price. Draw. You see how I did it here? Just draw the channel. Recognize there is an Elliott wave violation. You say, all right, this is not a trend. This is not a proper trend. We may have a consolidation. We may see a pullback. All right, which means the move that you see up that has violated the Elliott wave principle, the price may just bring it back again to form a double bottom or even an inverted head and shoulder. Like we are here now, you see here, it's going up like this. Because what we don't want to do as an Elliott wave trader is that when we are using the Elliott wave, we do not want to forget, okay, all right, other market participants, because the price can form an inverted head and shoulder chart pattern after that trend has failed. So you are here, you're cutting your way 1, 2, 3, 4, 5. Now you see an Elliott wave violation. You're expecting another corrective wave, but no, there is no corrective wave that is formed. Price just pull back. So like here, you can just pull back gently here like this to retest this level. And then from there, you start going up. Then other traders that are using normal chart pattern will say, George, I don't believe in your Elliott wave. We are now seeing, okay, an inverted head and shoulder chart pattern. So be aware of the normal chart pattern that are usually formed, all right? Head and shoulder chart pattern, double bottom chart pattern, inverted head and shoulder chart pattern. The trend may fail and the price may pull back, forming a specific normal chart pattern. All right? Sometimes the price may exhibit, okay, that trend that has failed, maybe a next wave. So if we have a W before and we recognize that it's a trend that has failed, we will expect another corrective wave. So your question is, if you identify a W corrective wave and a trend, you are now counting your wave, you notice that there's an Elliott wave violation, and which means the trend has failed, and the price break, if the trend has failed, the price will come below the channel, yes or no? All right? Whether we are going up or down. If that is the case, it is a next wave, we'll expect a corrective wave. But don't forget the normal, okay, chart pattern, double bottom, inverted head and shoulder chart pattern, head and shoulder chart pattern. I'm going to pause the video for a second because I need to do something, and I'll be back in a minute. Stay tuned. Okay, traders, let's continue. Another thing I want to mention to traders is that whenever we have, you need to understand also that we have Fibonacci traders that are trading in the financial market, and very often Fibonacci traders will take control of the market after a trending phase. All right. So what I'm talking about here, I'm talking about the Fibonacci pattern. So what we usually see is that we have a trending phase like this, and then we see a correction, and then the price will go up 1, 2, 3, all right, like this. So probably if you are Elliott wave trader counting your wave, you may notice that when that Fibonacci pattern is being formed, all right, during the A, B, C, D, you may notice an Elliott wave violation. All right, but what we need to be aware of, we need to be aware of the crab pattern, the butterfly pattern, the bat pattern, the Gatley pattern, very often after a trending phase. All right, so if you are counting wave and the wave has failed, and if you are counting wave or you are in a trend, all right, and the trend has failed, what I want to add is that think also about Fibonacci patterns. All right, sometimes instead of being an Elliott trader, at that point in time, one should become a Fibonacci trader, because you will see that we have a trending first, and then we call something like that we call the XA. So check it out at dayprotrader.com. I talk about Fibonacci pattern, not at the website itself, at the Day Pro Trader YouTube channel. I talk about the crab pattern, the butterfly pattern, all right, the Gatley pattern. The structure of those Fibonacci pattern. So when we are counting waves, sometimes we come across those Fibonacci pattern, and sometimes an Elliott trader can get confused and may not know exactly what is going to take place. But the Fibonacci trader that are using the Fibonacci pattern can quickly notice that this is a Gatley pattern, this is a butterfly pattern that is completed right here at point D, and they will be willing to sell it down. So you may see something like this, that there was a trend, and then there is a correction that did not come to the beginning of the prior trend, and then the price start going out like this. So Elliott trader will think that it's a new trend. So they say first wave, second wave, and then they see third wave. And now during the fourth wave, they may notice that the fourth wave is overlapping the first wave. But pay attention to the Fibonacci pattern is because we have trending first, XA, and then we have A, B, C, D. And those Fibonacci traders will start selling at the point D here when the pattern is completed. And at that point in time, you may see an Elliott violation, and you may think, what's going on here? The price can come back down all the way to the point A. So when it's coming down, so there are different levels. You can stop here. You can stop here. All right, so you will say, oh, all right, this is an Elliott violation. So be aware of the Fibonacci pattern. All you need to do is just flow with the price just flow with the price, just draw the line, okay? So Fibonacci trader will sell here, so they will take their first profit here. If he brings it below this level, they will sell it down. They will sell it down to this point. If the price fails to find a support there again, all right? If the price fails to find a support there, they can bring it back to the beginning of the trend. So you may see something like this. All right. So when the trend has failed, as you are counting 1, 2, 3, 4, all right, and then you see maybe the fourth wave overlap the first wave, you see another wave violation. All right. Think of Fibonacci pattern also. Think of consolidation. Think of the normal chart pattern. All right. If you do not see any clear-cut Elliott wave, corrective wave, just flow with the price, draw your line, and trade on the edge one step at a time until the price find a valid support level. All right. So I hope I have answered your question. All right. A trend that has violated the impulsive wave rules is a corrective wave. It can be a next wave. Usually, very often, it may be a next wave. Draw the channel. Expect either a consolidation, all right, a normal chart pattern to be formed, a Fibonacci pattern to be developing or being completed, all right. Think of a WXY wave pattern, but just flow with the price one step at a time, because it's not easy to trade corrective wave. So to answer your question, if the trend has failed or there is an Elliott wave violation, probably it's a corrective wave. We must ask, what is it correcting? Is the price going down instead? So, all right, is it going to go down instead? Are we going to have a bearish trend instead? What is it correcting? It has failed. It's a corrective wave. Is it a next wave? Is it a flat correction? Is it a zigzag? All right, flow with it. Remember the Fibonacci traders, the Fibonacci patterns. Remember the consolidation. Remember the double bottom, the inverted head and shoulder chart pattern. Draw the line, draw the channel, and just flow with it, because it is not easy to trade complex waves. All right. So I hope I have answered your question. So to avoid trading mistake, all in all right, whatever is happening, whether there is an area of violation or not, draw the channel. Switch also into market geometry. All right. So if there is so just draw the channel, it breaks above it. So then if there is a channel, it breaks below it. Project the channel in the direction of price. Use market geometry and just flow with it until it becomes clear that it is a WS wave, until it becomes clear that it's a combination, a complex correction, or something else, a double bottom, an inverted head and shoulder chart pattern, a head and shoulder chart pattern, or a Fibonacci pattern is completed, and Fibonacci traders are selling. All right. If I have not answered your question, feel free to put in the comment section to highlight what you want me to expand on, and I will come back again and record another video to answer your specific question. I would like to take this opportunity to thank that trader that has asked a very, very important question. That's why we are recording this video. Thank you, David. All right. If you have any more questions, all right, you know my email, my direct email. You can contact me anytime. And in due course, I will get back to you, okay? Until the next time, enjoy yourself and be very happy. If you found this video truly useful, all right, let us know by sticking your beautiful thumbs up. If you think that, this is another ridiculous, funny video, all right, mark it down. That will put us under pressure to improve our next recording. However, if you think that this is an essential tutorial that can open the eyes of other area wave traders, do not hesitate to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. Happy trading to you all, and I will speak to you soon.